Hey, what's up, y'all? It's Uneducated Yogi here with One Family Investing. We got some good stuff to go over. We got two videos in one day. This is about to be released when I'm done here. So, y'all already know. OneFamilyInvesting.podia.com. Put your name, put your email. It's a good thing. It's for your health. It's good for your health. And subscribing to this channel is definitely good for your health. So I want to get straight into looking at this, the dividends, understanding dividends and what they can do for you. So I'll just start by playing this video actually, because this person, so a dividend is a payout that a company will give. There's companies that pay out dividends once a month. There's companies that pay off dividends yearly, quarterly. So they're different. So we're going to look at some strategies here, because one of my goals is to have a dividend payout from something. And I just wrote, because Nike is a dividend stock, and I want $100 a month. I want to be paid $100 a month from Nike. So what would that take me? Like, what would it be? So stick around for that. And then we'll go over this real quick. This is something that would be important in a second here. Oh, so you're just not gonna do it, huh? Okay. So when reading charts gets real. So I just drew this in here, and I just want to show y'all this before. I'm gonna let this stuff go. This is gonna keep going. I'm gonna put this line. So I'm gonna put a resistance line. Is what we call this. This is called a resistance line. And it's called a resistance line because these candlesticks are going up to it, but it's not passing it. So this line is resisting against this. And once it goes through it, I put this top line here because if it doesn't break this, then it's probably going to come back down. Okay. And we're just going to let this play out while I go through the video. Okay. And we're going to just come back to this, and I'll tell you why more after actually let's do one right here. Say around here. And I'm going to tell y'all why I'm doing all of this. Okay. But I want this to play out while I'm live. Okay. So this is going to play out while I'm live. And let's see what happens. See if it messes with any of these lines. Okay. So now let's go to that dividend video. So this person, he gets paid off of a Schwab. Oh, what's the ticker symbol? I should have had it ready. So,
but we do have
right here, SCHD. SCHD. So, again, this is not financial advice, everybody, but this is definitely one that I would consider picking up just because it's an ETF. It's an ETF, and it's a dividend, and it has a dividend yield. So, for me, previous dividend payout, distribution yield. I never heard it be called distribution yield, but the same dividend yield. So maybe 3.72, which is pretty nice. Okay, so let's see how this gentleman talks about his dividends.
Charles Schwab or SCHD that has the 1,000 shares and around the amount that I do have that's there, and also the percentage yield. So with this percentage yield of 3.46%, over every quarter, I should receive $246.18.
So the importance about dividends is understanding how much do I have to invest to get that amount. And he rounded his off. I believe that's how he did his. He rounded his off to the 1,000 shares, and he wanted to see how much he would be getting from that.
What's up, you guys? It's Matt here. Welcome. 6% the last year to date, 12.55%, and the last year is 23.74%. So it's definitely performed quite a bit, and it's because of that popularity that it continues to grow, and because of videos, you'll see me gather more shares as time goes on. Now, what is a SCHD? If you wanted a simple breakdown, SCHD tracks a market cap weighted index of 100 dividend paying U.S. equities. So if you go down here and you look at those, right, a number of holdings is 103. But you're looking at financial services as the top at 19%, healthcare at 15.5%, energy, you have consumer defense, you have industrials, consumer cyclical, you have technology as well, and I feel like that's always a big part.
So that's cool. This is 100 companies that have dividend yields into this Schwab ETF. Okay, so 100 companies, or 103 now. And they all have dividend yields. So that's what he said. Let's keep going.
Part of the growth, especially during these last couple of years, is the technology side of things with Nvidia and Tesla and all of them there, right? So some of the bigger names that you have there, Home Depot is 4.37%. You have Cisco Systems, that is 4.35%. And you have some others. You have BlackRock, you have Chevron, you have Verizon, Pfizer, UPS, PepsiCo, some notable names there.
So what's cool about this is if we look at some of those stocks that he just named, even like Home Depot, if we go to Home Depot, so this ETF, the ETF is $26, okay? And then if you wanted Home Depot, as you can see, is $364. So you wouldn't be able to buy a Home Depot stock right now if you didn't have $364, if you were trying to get it in Charles Schwab. If you were trying to get it in Robinhood, you can get a portion of it, just so you know. But what's cool about ETFs, look how cool it is. It has a bunch of companies with high values in an ETF. A bunch of companies with high value, meaning that ETF is a promising ETF within itself, and it can, possibly make you some nice income. So let's keep going. Yeah, ETF is $26, bro. Like I said, I'm looking into this personally.
There, what you get paid in a dividend yield, you get paid 3.61%. It says 30-day, but this is it's actually a quarterly paying dividend, so you will receive it every 3 months, basically, during the normal quarterly payouts. But that's where this stands. Now, if we also look at the history, I think this kind of tells you the popularity there. In the last year, it's up by 24%. In the last 3 years, it's up by 8% on average. In the last 5 years, we're looking at about 13%, 10 years, 12%, and since 2011, you have 13.35%. So it's been up quite a bit over these last 13 years or so, going on maybe 14 years. But we look at QN versus month end, it's pretty much the same as they are paid quarterly there. So I want to show you guys what I'm projected to make in the 1,000 shares that I hold. So let's go over to my dividend tracker, which does break down kind of everything here. So I'm going to bring this over here. And yes, you may see differences based on the price that it's standing at, but we do have Charles Schwab or SCHD that has the 1,000 shares and around the amount that I do have that's there, and also the percentage yield. So with
All right, it's pretty small, but I got 1,000 shares, and it comes out to about $28,460. $28,460. And in this, you can see that he'll be getting an expected payout. I think it's 246. Here, let's let him finish and then keep moving.
this percentage yield of 3.46%, over every quarter, I should receive $246.18, which is amazing, right? That's not that would be the highest that I've ever received from a single payout. I think the amount that I've received the last time was like 120 or 131 was in September. So we have to wait a whole nother quarter in order to receive the amount that we have there. So the highest amount before that was 121, then we have 131, and then now we should receive well over $200 for this next quarterly payout. So what does that mean for my total?
So that's like a compound. You can see how the compound growth thing is taking effect too. I'm gonna show. Did I show it already? I don't think I showed it. But anyways, when we get dividends and then we reinvest them, this is how that compound thing happens. Yes, we did. So even in March, it said $35. So he had $35. March, April, May, June. So every 3 months. Then he got 121, 1, 2, 3. Then he got 131, September, October, November, December. So then he's gonna get this in December, the 246.18. So I just want you to see that, like, here's his plan, his goal. So he has a goal, he has a plan, and that's what we have to come up with. We have to come up with our own goal and our own plan. And one way we do that is we research different dividend companies. And I got my boy Wallstreet Trapper here. He just has some beautiful content. I've been following him for a little bit. I almost got my brother to kind of look into him. My brother was looking into stock trading. I wanted him to follow him, but he ain't do it, so I did it. I think he gonna come back with me after he starts seeing this channel right here. So here we go. Let's listen to Wallstreet Trapper and see what type of again. I'm here to share resources for y'all to do more research, but also ask me questions so I can help. That's what I'm here for. So it's like, hey, Yogi, yeah. If I wanted to, my plan is this, and I have this much type of income, and like, what would you recommend anything for me right now? And then we can just talk about it, because right now this is friends helping friends. Okay, this isn't anything crazy. I'm sure after a year or two of me doing this, I'm probably start charging. So I would definitely take advantage now. Probably on some stuff like this, I won't charge ever, but it's gonna be harder to garnish my attention after we start building this. So anyways, let's listen to Wallstreet Trapper, see what type of dividends is out there that we could possibly look into.
Texas Instrument, they have been increasing their dividend at 16%. They have a compound annual growth rate of 16%. Now, Texas Instrument is an amazing company. It plays a little bit in the semiconductor sector. It's definitely a solid track record, has great fundamentals. I like Texas Instrument. Next on the list at 18% is Visa. That's right. Visa is the world's largest credit card company. That is right. They are increasing their dividend on average of 18%. That is sweet. That is one of those buy and hold plays, consistently increasing the dividend. You're getting a great company. You're getting a leading company in the industry that is also paying you a solid dividend. Next, we're looking at Lowe's. Now, this one was real dope. So Lowe's is part of a duopoly which is two companies, Home Depot and Lowe's, when it comes to the idea of home improvements. Now, they've increased theirs by a 20% compound annual growth rate of 20%. We like that because that tells us what? The business is boring, but they're generating enough cash to pay us our dividend and increase it every year by 20%. That's 3 on the list. Let's just talk about that. All 3 industries, Texas Instrument, Visa, and then Lowe's. We went to 16, we went to 18, and then 20. Now let's tap into another tier. This is another tier of players right here. Next, you got
So I'm gonna just play it for here for now because I want to go over this chart. Actually, I want to go over the Nike one that I want to, possibly. I haven't come up with a dividend strategy plan yet, but Nike is up there for me just because it's an affordable stock, and I mean I trust Nike. I understand the brand a little bit. I got to do some more research on them, but I've been following Nike. I used to wear stomping in my Air Force Ones. Big boy going to stomping in my Air Force Ones. So, me and Nike, we know each other a little bit. But, yeah, plus the research that I've done, they're just in a really good position. So he came out with a couple more, United Health, MasterCard, AVGO, and that was the last one. And they had an outro. So, but I'm going to put the link in the description so y'all can go take a look at this if y'all would like to. So there's math to know about, okay, if I wanted $100 a month with Nike, there's math to know how to make that happen. Okay. So the math is we take the annual, how much you want annually. So if I want $100 a month, 100 annually, so that's 1,200 annually, and then I have to divide that by the dividend yield of Nike, and I figure that out. I just go over here, I go to account or NKE. We go to Nike, and then we look at the dividend yield. I think it was 2.82, if I'm not mistaken. So we go here, 2.82. So if you take this and try to do it like this, 2.82, it'll be wrong. That is the percentage, but in decimal form, you want to divide it by 0.0282. Okay, and when you do that, you take the 12,000 divided by this. So the 1,200 divided by 0.0282, and that equals 42,553. 553. It's my first time using this, y'all. Ooh, how am I doing? 53.19. Okay. So we have that. And then so this is how much I would have to have invested in Nike in order to get this $100 a month. And for me, I just wanted to take it a step further. I mean, this is all you need. You just need to know how much you need invested with the company, and then you have your target. But let's just say for me, because I'm an idiot, I wanted to just know how many shares that was. At its current price of $58, I could just divide this by 58 equals about 734, okay? Divided by 58 equals about 734 shares at $58. So 734 shares at $58 or this much amount. So if I wanted to get paid $100 a month, I need that. And what's cool about this, I mean, it sounds like a lot, but when you're doing this on a month-to-month basis, like let's say when you actually take your checks and you say, hey, I'm doing 50 this one, I'm doing 50 this one, and then I'm doing 50 this one. So just like Wall Street Trapper said, you know, when you or the other guy when we saw his dividends compound up and up, as your dividends are coming in, you're reinvesting them, and then with that reinvestment plus the profit you're making from when the stock isn't just going to stay at $58, it's going to go up, so your dividends is going to naturally get bigger as well. And then you're actually inputting every check. Let's say you get 2 checks a month, so this is once a month, $100 a month, $100 a month. When you keep doing this, you're going to get to 734, quicker than you think. And then you just move on to your next dividend stock plan and go over there. So, yeah, I just wanted to show y'all that. So for me, I'm going to be looking at this for a little bit because I might want to make my Nike stock. I want it to get there. So there's that. And let's just say you didn't have you were a very aggressive person. Like I want to move, Yogi. Like, hey man, this is too uneducated for me. I see what I did there. Anyways, so then that's when you start learning how to day trade and stuff, because if this calls the patient game. This is more of a patient game. Patient game slash depending on how aggressive you want to be. So, but we can't be expecting like a good amount of dividends for a little bit of time. If you want to watch that Wall Street Trapper video, he mentions it in there. He says he gives about 10 years not to get dividends. I have dividends from multiple companies, but I didn't have a plan to them. So that's what he's saying. It's like if I have a plan to them to where I want to make $1,000, $100, $2,000 a month, then I got to know that it's going to take me some time. But then I gotta invest properly. So then this last part, I just want to show y'all this thing again, and let's just see what was happening. So you see it's playing in between the lines, like I said, right? So let's just say if I wanted to trade this. So this is our cryptocurrency of ICP right here. This is called ICP, and it's one of our main cryptocurrencies in our account. So this is also part of the public account, just so y'all know. And I'm excited about ICP, especially when it finally kicks off. But until then, we're playing a bunch of different games with ICP. So you see, it's going in between the lines as your boy drew them, right? So if it would have broke down here, it would have went down here, okay? And as soon as this breaks up here, I still see a play in between here. One thing that we can do when looking at these things is, let's just say when I'm just doing a quick example because, for the sake of time, but let's just say I saw this down here. I came in down here and you see this red, this is called a candlestick. And these little lines on these are called wicks. These lines, they're called wicks. So this red candlestick down here, a lot of people was trading right there, but it stayed like this. It's called a doge. I think that's what it's called. Anyways, not a doge. I forget what it's called. But anyways, this form is a certain type of candlestick name. Now, I see this next candlestick and this next one, depending on where I put my resistance lines and my support line, and support line means the line that is below. So let's say I had a line like here. Let's say, and it's not let's say, I'm putting where I'm putting them on purpose. So this right here, and I would have went around here. And I wouldn't keep them all the same color. Okay, so when this breaks, my support or resistance, that's when we make moves as a trader who wants to get in a move, so to speak. And what we rely on is our support and resistance lines telling us, okay, well, if I get in around here, then I want to at least go up to this line, and how much would I make? So we have this risk to reward situation that we be thinking about. And I will, again, I'll show y'all that more in depth. But this is a way to where if you're not getting enough income, in your opinion, you can do things to where you can boost your income fairly, or your profitability fairly easy, by learning how to do this. And again, if you want to learn how to do something like this, let me know. I learned how to read candles a while ago, and I learned it for free. I just learned everything on YouTube to how to read the candles, and I made a playlist. So if you want the playlist, just let me know in the comments, and I'll just send it to you. It's not on this channel; it's on another channel that I have, and yeah, I'll share it with you. But everything I learned about candlesticks was mostly in that playlist that I made, and it's been pretty solid. And I have a little knack for pattern recognition myself, so there's that as well. But if I wanted to, I could sit here and play. I can sit here and play this game, and make income at these breaking points. Like this one would have been a big one, because you can make money when it goes up and when it comes down. So this, I would have seen this. I would have waited to see if it would have went up. As soon as I seen it go down, I would have came in probably like right here, and I would have just let it go. I would have let it go. I would let it go. And personally, I'm like a risk taker. So all of this little movement right here, I would have just let that go, because it would have broke this, and I would have just kept letting it go. And then this, it would have broke this line, so I would have let it keep going, and then it would have got here. And then once I seen it go here, once it starts to come back up, I'll get out probably around here, to be realistic. So then, depending on how many shares I'm trading, or contracts I have, I think that's what's called in options. I can make like a quick, I don't know, maybe 50 to 100, couple $100, depending on how many contracts I have. And we'll talk about that later again. But that's how people make money in day trading. You could just make a couple $100, and then you put the profit that you make back into the investments of like your dividend stocks, or, back into your cryptocurrency. And one other thing that I'm doing with this, again, this is ICP. There's a lot going on with ICP. It's called the World Computer, by the way. But I get paid no matter what with ICP, whether it goes up or down. I bought ICP when it was my average pay for ICP is I think $7 right now. So it says my dollar cost average for ICP is $6.67. $6.67. So, but I think it's a little bit higher. I split my portfolio up. So with that being said, I have when you're looking at it, you'll say it went down. So my ICP from, I bought at $9, but then I bought some more. It's down to $5. So now it's like, man, you losing us money, Yogi. I can't believe you. But what we're doing here is called staking. I staked 150 ICPs, and 150 ICP right now is worth 170 something. Y'all seeing me log into my cryptocurrency account. So this is where my ICP is held. And you see this, it says 742. So this 150 ICP right now is 742. And then I'm actually held, I staked 150 of them 65 days ago. And since 65 days ago, it's went up 2.23%. Okay. And just do this last math and then we're jumping off. So you'll just see what that would equal. So you have, what we say, 742. So you have 742.04 times 0.0232 223, sorry, equals 16 that. So you add that to the 742. So I'm up, $16, or it'll be $758 worth rather than the 742. And this is going to go up. This is a daily increase. This was even lower today. This came up today. This is a daily reward maturity of about 6%. So this is going to go up for 8 years. 8 years, I'm going to have this. It's going to go up no matter what. And when I want to take this out, whatever the ICP is at the time, I'm going to get rewarded how high the stock has actually went to. So there's a bunch of different ways for us to play this investment game and make some money from it. So I just want to show you all these things because these are like different monthly, quarterly payouts that we're going to be getting. And then again, I'm going to be showing how detailed this is. We're going to be sharpshooters in all of this by the time we're done with this. All right, guys. I appreciate y'all for being here. This was a bit longer than I thought, but hey, we're no edits. We're just going to put this out. Again, ask questions. Let me know what you think. Please like and subscribe. I'm trying to get to 50. And sign up for the newsletter. Sign up for the newsletter. There's going to be some more dope stuff in there. I don't know what right now because I'm focused on putting out these video contents, and it's taking up a lot of my time with everything else I got going on. It's what it is when you're trying to start a business. You know what I'm saying? When you're trying to start something, start a hobby. Okay. Well, anyways, love and peace, everybody. Thank y'all for being here.